Hey there, it's J-Rod here for Rich Retirement TV, and today I want to talk to you about my favorite stocks in the stock market, small caps. These are the names that have market values of $2 billion or less. And while the large cap stocks, your Apples, your Netflix, your Googles, what have you, 500 billion, trillion dollar companies or more, they get the most attention in the media, but it's the smallest stocks that give you the biggest bang for your buck. In a given year, small caps give you the maximum, the most upside you could possibly get, and actually, in the down year, the lowest amount of downside. So a lot to love here. Today I want to show you the breakout that small caps just experienced and highlight two of my favorite small cap names. So let's go ahead and dig right on in. Right here, we're looking at IJT. That is the iShares S&P Small Cap 600 Growth ETF. So these are the market's, say, growthiest small cap stocks, the creme de la creme of growth stocks. You can see here just exploding over the last couple of days, breaking out of a downtrend that goes all the way back to the summer of 2018. And the reason for the breakout is simple. The market is finally coalescing. Investors as a whole are coalescing around the idea of a Biden-Harris presidency. Whatever your political persuasion, the election was a torturous one for many people, and for investors, it was a very tough time figuring out, where to position your money or whatnot. But the election's almost behind us. We're coming towards the end of, a COVID-fueled recession. Vaccine news is coming out daily. Just saw a headline that hit this morning. Pfizer's vaccine showed 95% efficacy against the virus. We've seen studies from Moderna with their vaccine and other names. So vaccine for COVID is near, which means economic growth is almost here. So really, with risk capital flooding back into the markets, the growth stocks here of small caps present just a massive opportunity. And that's why we see this explosion here. And just coming out of any economic downturn, when you see things turn positive, small caps are going to rise the fastest and give you the biggest bang for your buck. So let's go ahead and dig right in. Real quick, I want to show you another chart here for small caps. 1 year rolling returns going back from 1973 to 2016. And this chart made by Dana Asbach at The Balance measures all the 1 year periods within that span from 73 to 2016. And in that time, the maximum return for the Russell 2000, which is the small cap benchmark, is nearly 100% compared to a downside of just under 40%. That's maximum, right? So actually observed 1 year gain, 1 year loss. Small caps give you the biggest bang and the smallest downside potential compared to to large caps here. Your biggest 1 year return just over 60%, max downside below the Russells, still in the mid, or it's the low single 40%, roughly downside. So small caps give you the biggest bang for your buck, period. So just want to emphasize that point. You take a look, IJT versus SPY, which is the S&P 500 ETF. Boom. Up in the last 6 months, 42% small cap growth stocks versus 26%, nearly double over the S&P. So you're seeing, even ahead of the election, you're seeing these small stocks get the green light. Lots of love here. And you go back, to 2009. It was, the beginning of the economic cycle from 2009 until 2020. You see here IJT again, the white line here, just smoking the S&P for the majority of the decade, and even when you count the dip, during the COVID crash, over the last, the majority of 2020, still up big time over the S&P 500. Most people won't tell you that, right? You turn on CNBC, you turn on Fox Business, they're going to, they're looking at big stocks. Hardly anybody's looking at these stocks, but they're smoking large caps. And, it's pretty easy to see. These are my favorites for this very reason. Max upside and massive outperformance here. So with that, now you've got the case for why small caps are so great, or why I love them so much. Let's go ahead and take a look at two that I love right now. So first stock on my list is Cohu. Cohu Incorporated. In short, they are a semiconductor test equipment maker. So they basically make parts, machines, and equipment to help chip makers, people that are making computer chips for computers, phones, and whatnot, test their chips in a variety of different environments, right? Because you have to, iPhones, they don't just sit in your office. You take them out and about, right? And they're in sometimes very hot environments. They're sometimes in very cold environments. So your chips need to perform in all these different types of environments. So Cohu makes the equipment that helps you do that. And you take a look here, just off of its low here in the middle of March here, just smoking higher. Yeah, just clean up this chart just a little bit for you. So, two things I love about this chart. You've got two patterns that I really, really love. You've got an ascending triangle pattern here. Just, the stock is moving higher off of that low, and as it pulls back, you're seeing higher highs as stock moves up. You're seeing higher lows as the stock moves up. So nice trend support here. As you see here, stock puts in a bottom right around 10. You got a top here. The resistance starts to form here around $20. This is a pattern that's called the ascending triangle pattern, and it's one of my favorites. When you see a stock break out above the resistance line, once it's proven it's got what it takes to make it to the next level, in these ascending triangle patterns, you see an explosive move higher, and that's exactly what we saw. But before you say, well, J-Rod, looks like the breakout's already happened. Not. You've seen one breakout, but the big breakout has yet to come. So you take a look here. You take the high, the Cohu puts in a high here just around $26 a share. And you see, on that ascending triangle breakout, we just blow right through that, you blow right through that resistance level at 20. We blow through the high for 2020, right there at, or the 1 year high, I should say, $26. Just you explode here. And really, if you take this horizontal range here in the $26 to 10, that's $16. You apply that $16 range to the top here of that breakout here, $26. That gives you a price target of $42 a share. That's upside of 50% from Tuesday's close. That's a lot of upside, right? So this breakout here of the ascending triangle, that gives you, a $30 target, which we're just below here, and that's just the $10 range between 10 and 20 on top of that $20 ascending triangle breakout. But the bigger range here, the $26 to $10, that gives you a lot of upside here, and you can see a lot of momentum here. Cohu breaking out here just after earnings. I don't want to get too far into it, but they crushed earnings for the second quarter straight. They crushed, sales estimates. They've crushed sales estimates for 5 quarters straight, and in the report here at the end of October, which was the fuel here for the massive fire, they raised their guidance well in excess of expectations. So for future quarters, they're expecting a massive move. And again, as we end this recession and head into economic growth, again, that makes perfect sense, and a lot to love here with Cohu. The second stock on my list is Atara Biotherapeutics Incorporated, ticker ATRA. I talked about biotech stocks last week. I love them right now. I highlighted 3 names in the video that I believe are going to do very well. Thanks to the momentum heading into biotech stocks because of the COVID vaccines that are coming out. And this is another name that really fits that mold. It just broke out this week, so that's why I didn't make last week's list. But again, you've got that beautiful ascending triangle pattern. You've got you've got a high here at just, let's call it $18 to be even, and then we've got a low here right around $6, and that gives you, that's a $12 range. Again, you see just beautiful, legging higher with higher highs and higher lows here. We got a nice, uptrend channel forming, and then just like Cohu had a great earnings announcement, and just blows right through the top of this ascending triangle, giving us a beautiful breakout here. Price target wise, again, you take that $16 range between $18 and $6, and you apply that to the top of this breakout here. That gives you a price target of $30 a share. And from the close here, another almost 50% upside here for Atara. So again, big upside potential in both of these names. And again, as you see, economic growth, continue. Don't be fooled by the headlines, right? We are entering a period of economic growth here, with more stimulus to come from the Fed, from Congress. We got a lot of great stimulus heading our way to boost the economy, and small cap stocks, growth stocks in particular. These are the names that are growing in excess of the market on average. These names are just going to continue to outperform. So take a look here at my favorite stocks, small cap growth stocks, and these 2 names that I've showed you today: Cohu Incorporated, ticker KOHU, and Atara Biotherapeutics, it's ticker ATRA. A lot to love here with these names. So thanks so much for watching today's video. If you have any questions, comments, I'd love to hear from you. Post a comment at the bottom of the video you see, or shoot me an email at askjrod@stpaulresearch.com. I would love to hear from you. Again, thanks for watching so much. Thanks so much for watching today's video. And on behalf of Rich Retirement TV, I'm J-Rod, and I'll see you next time.